So the engulfing candlestick pattern, you've probably seen it 1,000 times. It's one of the most famous signals out there. But here's the thing, and it's a big one. Most traders are using it completely wrong, and today we're gonna fix that. Seriously, let's get right into it. Is this super popular pattern actually costing you money? We're gonna break down exactly why this go-to pattern can be a total trap. But don't worry, we're not just gonna tear it down. We're gonna rebuild it piece by piece into a strategy that's actually powerful and effective. I promise, by the end of this, you'll be looking at your charts in a completely new light. Alright, here's the game plan. First, we're gonna revisit the basics, but with a twist. Make sure we have the foundation right. Then we'll give it a serious momentum upgrade. After that, it's all about strategy. Talking about key levels, winning with false breakouts, my favorite, and wrapping it all up with what I call the multi-timeframe secret. Okay, first things first, we have to start at the beginning. Before we even think about trading this thing, we need to be on the same page about what it actually looks like in a real, live market, not what some dusty old textbook says it looks like. So here it is, the classic bullish engulfing pattern. It's pretty simple, right? You see a red candle, that's the sellers, and then boom, it's followed by a bigger green candle that just completely, well, engulfs the body of that red one. It's a super clear visual cue that the buyers have just stormed the castle and taken control. Okay, now this is super important, so rein in. Textbooks love to show this little gap down before the big green candle takes off. But in the real world, especially if you're trading Forex or other markets that run 24 hours, you're almost never going to see that gap. In reality, the green candle usually opens right where the red one closed. Just knowing this one little detail can save you a lot of confusion. And of course, we've got the flip side, the bearish engulfing pattern. Same idea, just in reverse. A green candle gets totally overwhelmed by a massive red candle. It's a sign that the sellers just showed up in a big way. And again, don't get hung up looking for that textbook gap up. It's rarely there. What you really care about is that huge, overwhelming size difference. All right, we've got the basics down. Now let's level up. Because here's the secret. Not all engulfing patterns are created equal. Some are map. But we're gonna look for a specific type. A variation that signals some really explosive momentum. And here it is, the engulfing momentum candle. Now with this one, get this, the previous candle doesn't even have to be fully engulfed. The real secret here is the sheer size of the new candle. I'm talking about a candle that dwarfs everything around it. When you see one of these, it's not just a signal, it's a shout. It's the market telling you there's been a sudden, massive shift in power. But listen, this might be the most important thing I say today. Just using candles on their own isn't enough. If you go out and start trading every single engulfing candle you spot, you are going to get absolutely burned by false signals. A pattern by itself, it's just a shape on a screen. Without context, it's totally meaningless. And that brings us to our very first real strategy. Because it's not about the pattern itself. Not really. It's all about where that pattern shows up on your chart. In trading, context is absolutely everything. So here's the playbook. A simple 3-step process. Step 1, find a key level, a support or resistance zone where prices bounced before. Step 2, you watch for an initial reaction right at that level. Maybe you see a long wick pop up, showing that the level is holding. But, and this is key, you don't trade yet. You wait for step 3, that big, beautiful engulfing candle to form. That is your confirmation. That tells you the reversal has some real muscle behind it. I want you to burn this into your brain. A reaction does not equal a trade. Just because price hits a wall and pauses doesn't mean it's going to turn around. It could just be taking a breather before smashing right through. That first little reaction, that's just a clue. It's not the signal. The engulfing candle, that's the signal. Patience here is what separates the pros from the amateurs. Okay, now this is where it gets really fun. We're about to learn how to spot one of the most common traps in trading, one that catches beginners all the time, and turn it into one of our absolute best trade setups. We're literally going to learn how to profit from other people's mistakes. So check this out. Here's how the trap is set. First, you've got your key level. Then, price breaks through it. All the breakout traders see this and they jump in thinking, here we go. But then, bam, a massive engulfing candle slams price right back in the other direction, back below that level. That, my friends, is a false breakout. And when you see that, it's our signal to get ready to pounce. So what makes this setup so incredibly powerful? Well, think about it. All those people who just bought the breakout, they all placed their stop loss orders just below that level. So when that giant engulfing candle comes crashing down, it triggers a chain reaction. All those stop losses get hit, which are basically automatic sell orders. This flood of selling is like pouring gasoline on a fire. It adds a ton of momentum to the move in our favor. Okay, we've covered where to look and what to look for. Now it's time for the final piece of the puzzle. This is the secret sauce, the technique that ties it all together and helps you dodge so many of those nasty fakeouts. Think of it like we're about to pull out a magnifying glass for our charts. The secret is simple, but it's a game changer. You have to stop looking at just one chart. We're going to use two perspectives. We'll use our main chart, maybe the 4-hour or the daily, to find the big picture setup. Then we're going to zoom way in, down to a lower time frame like the 15-minute chart, to see what's really happening inside that one big candle. So here's exactly how it works. On your main chart, you spot that perfect setup. Let's say it's a bullish engulfing after a false breakout at a key support level. Looks great, right? But hold on. Instead of just jumping in, you flip over to your intraday chart, and on that smaller chart, you're looking for proof of a trend change. Maybe you see price finally make a higher high, breaking that little downtrend. That small confirmation on the lower time frame is what validates the huge signal on your main chart. What this technique does is give you the best of both worlds. You get the high probability setup from the big picture on the main chart, but you also get a super precise confirmed entry from the lower time frame. This right here is how you learn to confidently tell the difference between a real reversal and just a fake out bounce. So there you have it. We've taken a simple pattern that most people get wrong and turned it into a complete trading system. It's all based on context, momentum, and multi-timeframe confirmation. From now on, when you see what looks like a false signal trapping other traders, you're not going to see a problem. You're going to see an opportunity. The only question left is, which one are you going to spot first?